The Northstar BCI Equity Fund is an SA-only fund. It is actively managed and is invested in high-quality companies while taking into account the highly concentrated nature of the local market. The aim of the fund is to provide investors with long-term capital growth and to beat its benchmark, the JSE Caps Wix. The fund had a strong quarter, returning 11.4% net of fees, which compares favourably against the JSE Caps Wix, which returned 9.6%, and the average peer in the sector, which did 9.4%. The fund benefited from being overweight South African financials, both banks and insurers, as well as clothing retailers and general financials, while also benefiting from being underweight PGM miners, which did particularly poorly during the quarter. From a stock perspective, conviction calls in Pepkor, BAT, Mr. Price, Wilson Bailey, Raubex added to value. And against this, two positions which hurt us, which stood out, were Sasol and Supergroup, which underperformed during the quarter as a result of poor results. From a positioning perspective, the fund remains overweight South African financials and industrials, while maintaining an underweight position to resources, even though we feel that the risk-reward balance for this last one has improved considerably over the last year. In terms of changes to the fund, the only change that we did was to reduce some of our defensive rand hedge positions and shifting them into more cyclical industrials as a result of opportunities that we saw. The fund has benefited significantly over the past 6 months from a rebound in SA-sensitive assets since national elections. Even though the stocks have run hard, we think that there's still a significant opportunity embedded in these sectors, and we believe that the fund is positioned to benefit from these.